Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, January the 29th. The year's 2025. Let's talk trading methods. These videos are for educational purposes only. Your results may differ from mine. And no matter what method you use, always have your risk management in place. Never lose more than you're willing to lose on any one single trade. And speaking about methods and risk management, I'm really starting to believe and starting to have the philosophy that risk management should be separate from your method. Now, your method might say put your stop loss at a certain place, and you can always adjust your position size so that when you hit that stop, that's you won't lose more than you're willing to lose. That's one way. Or you could just say, if something moves against me 5 pips, I'm just going to get out because, this isn't working. And 5 pips is a lot easier to make up than 10 pips, which is a lot easier to make up than 20 pips. Because, and you see all these guys talking about risk reward, blah, blah, blah. In fact, it's really funny. Somebody had asked me something about FOREX Factory, and somebody asked me something about the wick zone. And so I was looking over at FOREX Factory, and there's this one trader. He's got, I don't know, thousands of subscribers, and he only has 3 threads. So I went to look at it, and it's like, you look at the very first post, and I mean, it's almost like a book. All these charts, and then the indicators, upper and lower. And I'm just looking at it going, if you just did a holo trade there, or traded out of the wick zone or rat zone, it would have gotten in a lot easier and with a whole lot less effort. I mean, it's kind of funny. So, like I said, I had a few people asking me about some of the methods here. Yes, I still use the wick zone. Somebody was asking me that. And to me, it's pretty simple. I mean, this last hour, you had a break here, and it dropped down there. I think it was what was it good to? So you had it hit a low on 93. You got in at 14. So that'd be 14 plus 7, 21. You could have maybe made 20 pips there if you wrote it out. It's just real simple. And then, coupled along with that, if you look here at the rat zone, I mean, you could have gotten in at 08, you'd be up 4 pips, and you still have a chance to get in if you use the original rat. And then let's see, let's switch this over to H1. Only because I don't have it on the board, but you can see here we had a holo, the lowest open trade right there. Price made the lowest H1 open of the day. Could have jumped in, say, around 97, 98, and you'd be up about a dozen pips right now. So, I mean, but you can see, these methods that I show are pretty simple. Most of them are based on statistics, frequency distributions, because usually by the end of the day this number's greater than 20. Fade and a pivot, once again a statistical trade. Bambino flex indicator said to go short, which in this is a statistical trade also, by the way, from Bambino Flex, the work that they did. And so you can see here, short, that would have been worth, right now, if you'd been short the pivot, you'd be up over 40 pips. So there was another nice opportunity. And the other one, something Walmart has been looking at, is that this particular H4 candle, which is my 6 o'clock candle, right here, bar 1600, but it's 6 o'clock my time. It's 6:30 actually now, but you can see that local time right there. but just to be on the right side of the open, and you have a boatload of pips there. It was once again, the open was the same as the H1 lowest open, so this was the H4 lowest open. They all coincided, so nice pips to be had. But once again, really simple methods. You don't have to learn about waves and Wyckoff and all that other stuff. You just don't have to. Okay, we took out today's pivot. Might as well scan through there. Missed the pivot by 12 pips so far. And the month we missed by 24. And I already showed you the wick zone. And you can see here we had a whole low. The low was of the day was 1 bar ago. 7 bars ago. 1, 2, 3, 4, 5, 6, 7. High of the day was 7 bars ago. See, nobody's in the holo zone. Oh, and I just had a trader ask me something about the dashboard. They wanted to have pip value. They asked me, was pip value, let's see, do I have pip value? No, I don't. So I guess I'll have to add that for them. Okay, once again, simple trades here. Looking at the psychological lines, daily open, previous day's low, today's low, that crossover right there. I mean, what could be simpler? It just amazes me how the more, I guess not esoteric, but the more maybe rigorous, something looks, it looks, studious, like, wow, this person's put in a whole lot of work to come up with all these indicators and all these different things to put on the chart. So they must know what they're talking about. So I'm going to learn that. And they wind up getting burned. I mean, I have to laugh only because I'm kind of laughing at myself, because in the beginning, that traditional trading technology, education, it's just, for me, it's just way too much. And see right here, we had this big bar, what I would call a big range bar or a return bar. You see price came down. Well, what happened? It had to return to the open, and it did. A lot of this stuff, simple observation, and you can see price is falling here, and then you get a flip-flop. So this means this could be a bottom, and then price will go up from here. Because for price to go up, you're going to have a bear followed by a bull. Then you get a bear followed by a bull, bear followed by a bull, bear followed by a bull, and then guess what? Up she goes. I mean, who teaches that? I mean, you're not going to find that anywhere. It's too simple. It's like, okay. And one of the things I've learned, in fact, I even have it on one of my charts using my notes. It says, wait for a flip, flop, flip. So here's a flip, here's a flop, and there's a flip. Here's a flip, here's a flop, here's a flip. So flip, flop, flip. And that's usually a pattern that occurs near a top or near a bottom. And right here we go. Flip, flop, flip. And down she went. But the thing is, these are 5-minute candles. So 5, 10, you gotta wait 15 minutes. Are you willing to do that for your trigger? I mean, you're sitting there for 15 minutes and you're seeing price move up and down, and it's like, and you're itching to get some of that action. And it's really, really, kind of difficult for a lot of people to do that. Me being one of them. Okay, here, this is one of Walmart's trading screens. I think he may have changed it, but you know, here's your flip-flop box. So you got a flip, and you have to see what happens here. And then, you know, one of the, well, let's see. You know, the lowest low wick zone right here. This is a new type of wick zone I use for the, not to be confused with the daily wick zone, but you look at this lowest low wick zone. Once again, you know, you want to trade out of it because price doesn't like staying in the wick zone. And somebody was asking me, yeah, here you go, highest high, lowest low wick zone. That was one of last year's donationals. You know, they were asking me which donationals. It's I don't know, it's really tough. I always usually tell people, I think it was 20, it was either 2017 or 2021, I can't remember now, but I did a whole lot of statistical indicators. So if you're into it, like I think it was 2017, I had the price travel and all those real-time price travel, a lot of analysis. So you can see here on M1, we got a flip, flop, flip. We got a 3-ball here, 2-ball here. So you could look to go long. But see, a lot of times I used to try and jump in here and I get burned. So I've learned to wait. And I learned not to trade off a 1-ball. Wait for a 2. Because when you go back and look at the chart, you can see, you know, these were 3-balls until this one came in. Oh, that indicator repaints, but we've been through all that, debunked all that nonsense. So yeah, traders, you know, the method I use these methods. Yes, I still use them all, but usually they're in conjunction. So for example, the pound right now is within the rat zone, and I'd be looking at a holo possibly. So you can see here, maybe it gets back to this holo zone, maybe it doesn't. We're at the psychological double low area. So, you know, all that stuff's kind of running through my head at once. But as far as a trigger, you just want to pick one, you know. So it's kind of like we identify an area. Wick zone here. We've got a rat zone down here. We got the holo zone down here. And price likes to, you know, leave those zones. And so you identify that, and then you go, what's my trigger? Well, maybe it's a flip-flop flip. Maybe it's, you know, something else. Maybe it's a lower low, higher close. Maybe it's just coming out of that the lowest low wick zone. Any of those can be triggers. So, you know, identify, you know, your method, and identify your, you know, the trigger for entering, and then just take the trade. I mean, you don't have to have some kind of fancy method. You don't have to have most of this stuff. You could trade with the naked chart and just maybe have a couple of horizontal lines on it. You know, I like to have today's open, previous day's high low, current day's high low, just so just for some references. You know, in this particular case, I'll have the previous candles high low just to see from price action. You know, price action, it's either going to break out of the high, break out of the low, break out of both, or stay within and create an inside bar. You know, once again, simple stuff, just like, you know, the state changes that I came up with. You know, you're either going to have higher high, higher low, lower high, lower low, outside bar, inside bar. Those are the only 4 states, you know, but that's really simple. But who teaches it? No, you got to learn all these different candlestick patterns and pin bars and all that. You don't have to do that. So, fellow traders, no matter what method you use, it is not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.